All right, what's going on, y'all? I just wanted to come in here and give a trade recap for my trade on Monday. Today's Tuesday the 19th, but this is from August 18th, yesterday, Monday. Um, just to start it off, we can see that Monday we had no news. So, to keep in mind on No News Mondays, that the market does move slower, or it can. In reality, the market can do whatever it wants, but especially on No News Mondays, it might just be lagging around and moving just to like show it real quick. If we want to look at the 15-minute chart, look at that. That is chop, boom, 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 up and down, up and down, up and down. Not the best price action on this Monday morning. But just to start on a top-down analysis, we'll start on the daily. Um, and so the first thing I saw coming into Monday was that we had a daily inverse for value gap. So right here in this daily candle, remember that everything, the higher time frame holds higher power. So if we have a daily inverse for value gap, we're gonna probably want to be delivering to lower points, and we're gonna be bearish because we inverse the daily. So that's just something to, when you're coming in to do your bias, you need to come. And I always start on the daily time frame, and I kind of work my way down daily, 4 hour, things like that. So we can get that out the way. So on the 4 hour here, we can tell that we're in kind of bearish order flow. And this 4 hour bearish for value gap right here is what I took the trade off of. But since market opens at 8:30, this fair value gap did not open until 9 a.m. So if we go down to the 1 hour now, we can clearly see that, hey, we are disrespecting bearish PD arrays. So right here, we're disrespecting an hourly. Again, in Asia session, we disrespect an hourly for value gap. That's a bullish, and now it's inversed. And then we can also see that we are respecting, this hourly right here. Right when market opens, we can see at 8:30, we respect that bearish right there, and we absolutely dump. Um, but what are we moving off of, and what are we aiming towards? So really, the only draws on liquidity that we have lower was previous day low. So this was Monday again, and this was Friday's low. So that's probably what we're going to be aiming towards, because that's what the higher time frame is telling us. Again, daily inverse gap, big. We're going to go lower. We have a respection of the 1 hour, and then we have disrespectation of 1 hour bullish confluences or PD arrays. And then we just have some chop at the beginning. So right when price opens up, right when market opens up, price just flushes down. We can see that an inverse of the 5 minute happens right here. And really what I wanted to see, I like to see 1 minute confirmations, and I just wasn't seeing it. I would have taken this trade right here if we get an inverse of this 5 minute, correct? And then we're going to go down to the 1 minute. And if we're wanting to go lower, I want to see a respection of a bearish fair value gap. But we didn't see that. And we, inverse this gap. So I was like, okay, so during this day, I was really patient, and I was fading setups that maybe would have been taken. But for me personally, I like to get the inversion, and then I want to get the respection of that gap, depending if we're going higher or lower. And then we can see that we had more. If we go back to the 5 minute, so we had this gap here, and then all of a sudden we had this gap now. Right after we have a rundown, now we have an inversion to the upside. So it's like we have an inversion to the downside, we come down, we have an inversion to the upside. This would have been a nice trade to take up, but the reason I didn't is because we did not take out previous day low. I have it written out here because it's like way far. Just for some reason it's way over here, but this is previous day low. And if we look, we did not take it out. We missed it by one tick. If in the case that we did hit and take out previous day low right here, we would have rode this up. We would have, okay, liquidity was hit, previous day low. What are we looking for now? We're looking for a target above. What could our target have been? It would have been this 4-hour gap above opening. And we would have had this inverse, and then we would have waited for a 1-minute inspection, and we would have taken it up to that 4-hour. But we didn't hit no liquidity points. We can see that this is a huge draw on liquidity, previous day low. So we want to be, hitting that point and then going somewhere else. But we see that we left it. So it's kind of shows bad price action whenever we inverse a gap to the downside and then we inverse a gap to the upside. It's just kind of showing flip-flopping price action. Again, it's a no news Monday, so we're really having to be cautious in what we do. So eventually it becomes 9 o'clock and we open up this 4-hour bearish for value gap right here. And so now remember, what's our first step? It's going to be hitting a liquidity point. And when we go in to look at it, we can see that, hey, we tapped in to this 4-hour bearish and we're having sells and rejection off of it, showing that, hey, maybe we do want to go take out this previous day low now because we really left previous day low and relative equal lows by it. And those are huge draws on liquidity. So we can see that we came up, we swept this high right here. It's a little turtle right here. I don't know why it's called turtle soup, but apparently some people call it turtle soup. I just call it a little resweep. So right here we hit a resweep of the high and we poke into this 4-hour bearish for value gap. Off of this, I want to see this leg right here. So the black, blue, black, this is one trading leg. And in this singular trading leg, I want to see an inversion, whether that's from the 5, 4, 3, 2, or 1 minute. Obviously, the 5-minute didn't give us anything. When we scroll down, boom. We see that in this trading leg, it's a black candle. We have blue candles and then another black candle. So this is one trading leg. And we have a 4-minute bullish for value gap that turns into an inverse for value gap when it gets disrespected by this candle closure. So now the next step, some people might have just entered here and wrote it down. But again, I like the 1-minute confirmation confluence. So on that, I waited. We get the inversion here. And in the next trading leg, we have 2 bearish gaps. We come into the first bearish gap. And I was checking on ES because this is on NQ. And I was, they're 2 correlated assets and indexes. So I was looking and ES only had 1 gap while this had 2 1-minute gaps. So when I saw sales out of the ES 1-minute gap, I was also able to tell that this was a sell out of this gap and that we're probably not going to go up into this gap here. So our target is previous day low right by this relative equal low. As soon as we get sells out of this bearish for value gap, I'm entering off the next candle. I enter right here at 9:37 and the trade ends at 9:46. So 9 minutes later, we take out previous day low. What I usually like to do is I like to have the stop loss on both, fair value gaps, but this is such a huge one. I was really playing a little bit risky having it at like a 1.5 trade, but if we're delivering from this one, and like I said, I was also checking on ES, the other index, that we were delivering from that bearish 1 minute, I had enough conviction say, hey, we're going to deliver lower. This was a really, really good A+ trade because first off, we were patient during the day. We were, fading those setups in the morning earlier. And we waited for this 4-hour bearish to be made, this 4-hour bearish gap to be made. And we were able to be patient in our trades, wait for these resweeps to happen. We got really lucky that they left previous day low. But even if we didn't get lucky that they left previous day low, what could we have done? Let's say it sweeps. Let's say we get the inversion, and then we go and we take out a target. So it's just depending on which side you're really looking for. And in this case, we saw this. We saw the inversion on the 4-minute. We saw the 1 minute. And we just entered off of that. We're having building that confidence in being a self-sufficient trader, and we're wanting to, enter off of what the market is giving us. We are reactionary traders. So when the market is giving us inversion to the downside, then inversion to the upside, we want to make sure that we know what we're looking at. We don't just want to be jumping in off of something. That's really why I like the 1 minute confirmation confluence of like a respection of the gap. But this was a really A+ setup, and you can see here that the trades that we would have taken here, they just wouldn't have hit. It wouldn't have hit profit and stuff like that. So the real takeaway here was that patience pays, because if you did take this setup here to come down to previous day low, you would have definitely got stopped out, because your stop loss would have been here. So whenever we can match up everything, the inversion plus the respection after hitting a liquidity point, and then we also have a draw on liquidity to where we're going, that's when everything's going to go together. But yeah, I just wanted to make a trade recap from yesterday. Hopefully we can learn from this, and that we can implement this every day to try to see how we can become better traders and things like that. So hopefully y'all enjoyed. Thank y'all very much. God bless. I love y'all boys.